to make 3 quick assumptions about you. You're busy, you do not want to waste time on someone who cannot help you, and you want facts, no marketing fluff or BS hype. As an attorney, I used to bill clients at $500 an hour. I'm going to treat your time with the same level of respect as I did for those clients. This is the definitive guide on how to build a crypto portfolio for 10x gains in 12 months. So let's go over the agenda. Who am I and why should you listen to me? Number 2, our 3-step process for building 10x crypto portfolios and whether we're a right fit for you. As a bonus, after you watch this video in full, I will give you a full document version of this presentation. So even if we don't end up working together, you can use that document as a step-by-step guide to grow your crypto portfolio this cycle. Who am I and why should you listen to me? My name is Frank Hepworth and I'm the founder of Yield School. I'm a licensed attorney who has specialized in crypto for nearly a decade now. I have consulted crypto exchanges, both domestic and international. I've worked with government crypto regulators, and I even helped the first crypto ETFs get approved on the Toronto Stock Exchange. So I really saw behind the scenes of how this crypto industry works, and those insights allowed me to turn $79,000 into over $1.1 million last crypto cycle. When I began sharing those insights on TikTok, the response was overwhelming. Over 45,000 followers and millions of views in just a few months. Out of that organic demand, my company Yield School was born. Now we have a lean team of 23 full-time researchers, analysts, and support staff. And my vision is to evolve Yield School into the global leader for crypto services, a Morgan Stanley for specifically the crypto asset class, if you will. Now, while we do have plans to roll out funds, tax services, and other offerings, our current speciality is very simple, helping high net worth individuals like you multiply their wealth through the crypto asset class. So let's talk about that. How do we help our clients build a portfolio for 5 to 10x gains? Our 3-step process focuses on 1, how to time your investments for maximum returns, 2, where to invest, and 3, what to actually invest in. This process has been distilled over 8 years. So that's me consulting crypto exchanges around the world. That's me working with government regulators around the world. And that's me multiplying my own portfolio by more than 10x last crypto cycle. Step 1 is timing. Step 1 is by far the most important step because in crypto, timing is everything. If you mess it up, nothing else is going to matter. It is very important for you to understand that right now we have a very brief window of opportunity. The crypto market is on the verge of the next bull run. And for those who position themselves correctly now, have the opportunity to build a portfolio that can 10x this cycle. But this window of opportunity is closing fast, and the reason for this is simple. Ever since the inception of the crypto asset class, there has been a cycle that has repeated like clockwork. When we look at crypto cycles, we generally look at Bitcoin because if Bitcoin is up, on average, most other assets in the market are up also, and this is because of Bitcoin dominance. As of right now, Bitcoin makes up about 56% of the total crypto asset market cap, and therefore it is an indicator of the crypto market at large. And so when we look at the Bitcoin chart, we see the price right now is around $63,000. But if we go back to 2013, we see the all-time high is around $1,100. And 2 years later, in 2015, the price came back down to around 20% of the peak. 2 years later, all-time high, $19,000. Then it drops back down to around 20% of its peak 2 years later. What happens next? 2 years later, another 2 years, all-time high, $66,000. And then what happens? 2 years later, it goes down to 20% of its level. So that was 2023. And now we're going into the next 2-year stretch, the next bull run. In these charts, you can see a consistency, right? You can see a pattern. Every 4 years, the crypto market goes through an explosive bull run, then drops back down again before heading into the next bull run. In fact, I was telling people about this back in 2023 when Bitcoin was at 17,000, telling them to buy because I understood how these cycles worked. Each time the new peak price makes the previous peak price look like a small bump on the chart. Look at 2013, the peak at 1,100 seems gigantic, but then 4 years later in 2017, you can barely even see it on the chart. As we head into the next bull run now, experts are debating where the price will end up. Some are forecasting 120,000, others are saying 100,000, some are predicting 250,000. Whatever the price goes to, 15 years of historical data tells us that it will be much higher than the previous all-time high of 66,000. And the question you should be asking at this point is why? Why do the prices increase every 4 years? Why do these cycles keep repeating? And these are great questions, and the answer largely has to do with the Bitcoin halving. This is a pre-programmed event that cuts the amount of new Bitcoin being created in half every 4 years. Now that's new Bitcoin being created in half every 4 years, not all Bitcoin, just the new Bitcoin being created. Now, because this happens every 4 years, there is a 4-year cycle. So at the same time that this halving is going to happen, the news and people start talking about this Bitcoin halving and more people get interested, resulting in higher demand. And this is basic economics, right? Higher demand means higher prices. And as you can see on this chart, when the demand line moves up, the prices increase. But that's not all. At the same time as demand is increasing, the supply decreases. As you can see here, the supply line moves back and therefore prices increase. So higher demand multiplied by lower supply is exactly why we see a strong bull run 12 to 18 months after every Bitcoin halving, because it takes time for that restricted supply to be affected into the market. There is a delay. So we can see in 2012, it took about 12 months from when the halving happened to when the market peaked. In 2016, the graph looks almost identical, except this time it took 18 months from halving to market peak. In 2020, the market had a lower peak after 12 months and its maximum peak after 18 months. What these charts show is that 12 to 18 months after the halving, the market peaks. This pattern has repeated for 15 years since the inception of Bitcoin in 2009. The most recent halving was on April 19, 2024, meaning the market will peak somewhere between April to October of 2025. This is why I say the window of opportunity is quickly fading away. As the bull run starts to take off, prices of crypto assets will rise. Now, this is a good thing for our current clients because they're already positioned into assets that we think will do very well this cycle and we've researched thoroughly. However, for investors who are not positioned yet, the market doing well is actually a bad thing because the higher the prices rise, the less assets are going to be available to be bought at a cheap enough price to make those 10, 15, 20x gains. Eventually, the time is going to come here soon where the prices get so high that the opportunity to significantly multiply your wealth in crypto this cycle just fades away. And when that point comes for sure, I'm not too sure, but what we do know is that when the cycle begins to peak, it happens very quickly. So let's take a look at 2013, for example, sideways action, nothing happening, then out of nowhere, an intense rally. And the same thing in 2017 and again in 2021. See, unfortunately, most investors don't understand this. So they miss out on the bull run because they mistakenly think that they have more time than they actually do. They don't understand these 4-year cycles. They don't understand the market peaks 12 to 18 months after the halving. And they don't understand that when the bull run kicks in, it happens very fast. And these mistakes cost investors cycle after cycle millions of dollars. Because when you lack this knowledge, you only look a month ahead and a month back. And you make these short-term decisions. You see the market going down a little bit, so you sell everything in a panic and then you miss out. Or you see the market has gone up a bit, so you decide to wait until it goes back down before you can buy in at a reasonable price. And again, you miss out. This is just what happens. When you think short-term, when you look short-term, you miss the big picture and you miss the cycle. The key to maximizing your profits is to ignore the day-to-day and the week-to-week fluctuations and look at the cycle over a multi-year period and plan for 12 to 18 months after the halving. And when you do this, you see that we're only months away from the next bull run. But this time, there's one key difference. Look at this chart from the World Bank. It shows crypto adoption in the 2020s and internet adoption in the 1990s. They are on an almost identical path. Why does this matter? Because crypto at its core is a technological innovation like the internet, and every new technology goes through an adoption life cycle. As you can see in the chart, the life cycle can be divided into 2 sections: early market and mainstream market. In the early market, the innovators are the first to adopt the new technology. These are your developers, your crypto miners, your tech enthusiasts. Then come the visionaries who can see the potential of the technology but aren't quite as deep into it like the innovators are. These are your big investors and tech entrepreneurs. Then comes the chasm. This represents a critical gap that must be passed before a technology reaches the mainstream market. All previous crypto bull runs have been fueled by early market adopters like the innovators and the visionaries. But this bull market is going to be different. For the first time ever, crypto ETFs, just like the crypto ETF that I worked on for the Toronto Stock Exchange, have opened the floodgates for big institutions to pour their capital into the crypto asset class. In fact, Bitcoin ETFs are seeing daily net inflows averaging about 125 million per day. On peak days such as June 4th, 2024, the inflows reached as high as $886 million, marking it one of the highest figures on record. And this is why Larry Fink said the Bitcoin ETF is the most successful ETF ever. And not only are these ETFs creating an easy channel for capital to flow into crypto, but they're also legitimizing crypto as an asset class. And this legitimacy shows that the government will not and cannot restrict crypto. It's now here to stay. And what that means for you, again, is that time is running out. In any technological innovation, the people who make the big money are the ones that are early. It is the early investors that make the outsized returns every time. The investors that go against the mainstream crowd and adopt the new emerging technology before the masses. The ones that invest early while others hesitate in doubt. These are the investors that cash in the highest returns. But as more institutions come into this space and as more individuals begin to realize that crypto assets are a legitimate asset class, your opportunity to significantly multiply your wealth by being early gets narrower and narrower. Because right now, there are 49 crypto ETFs spread across the globe in places like Canada, the USA, UK, Australia, Europe, and South America. And these ETFs serve as a marketing tool to spread awareness and increase adoption of this asset class. And for now, these ETFs are just focused on Bitcoin and Ethereum, but Solana and XRP ETFs are on the way. Soon, ETFs, believe me, ETFs are going to be available for many crypto assets, baskets of crypto assets even. And for every new crypto ETF, an institution will come in and drive up the price of that crypto asset. And this will spark the biggest bull run we've seen yet. And it will result in us passing the chasm and going into the mainstream market phase of adoption. And that is why step one of our process, of our service, is to position you for these cycles early. If this document is still live, it means you still have time. So do not chase the secondary markets. Don't chase these assets. Position yourself early before even more big institutions come in, before crypto adoption rises any further, and before we pass the chasm into that mainstream adoption. The greatest danger in this situation is to just sit and do nothing, thinking you have time while you actually don't. But before you pull out your Coinbase app or Kraken or Crypto.com, whatever secondary market exchange you use, and start aggressively pouring money into this asset, into crypto, there's something really important you need to understand. And that is step two, which is where to invest. Did you know that Solana was available in the primary crypto markets in April 2020 at 95 cents, but it was listed on Coinbase 13 months later at $44.45. So if you bought Solana on the secondary market Coinbase, you were 13 months too late. You missed out on a 4,578% gain, meaning you missed the opportunity to turn $10,000 into $457,000. That's a 45x missed. And Solana is not the only one. We can look at AVAX. It was available in the primary markets July 2020 at 50 cents, but it was listed on Coinbase 16 months later at $66.63, meaning if you bought AVAX on Coinbase, you bought it 16 months too late and you missed out on a 13,226% gain. You missed the opportunity to turn, again, $10,000 into over $1.3 million or $100,000 into $13 million. That's 132x missed. Another example, AXS. It was available in the primary markets December 2020 at 43 cents. It was listed on Coinbase 9 months later at $66.12. That's a 15,276% gain, 152x completely missed. At this level of growth, $10,000 would have turned into over $1.5 million. So do you see the problem? There are two crypto markets. There's the primary crypto markets, and then there are secondary crypto markets. Secondary markets like Coinbase, Crypto.com, Kraken, they show you assets too late, months and sometimes, honestly, years after they're actually available for the first time. By the time you see them on your secondary market exchange app, you've already missed the boat. The asset has grown to maturity without you. Sometimes though, you won't even see these assets on your app at all. So for example, TON, this cycle, it was available in the primary markets at 52 cents and it's reached a peak of $8.17. That's a 1,471% gain, and some of our clients have made great money on it, but Coinbase still hasn't listed it yet. Peas, available in the primary market since December 2023 at 36 cents, and it's reached a peak of $10.50. That's a 2,816% gain. That's a 28x. And Coinbase still hasn't listed it yet. Here's CAS, available in the primary markets since June 2022. Now it's up over 92,437%. That's literally a 924x gain, and Coinbase still hasn't listed it yet. $10,000 invested into CAS by now would have turned into over $9 million. To be specific, $9,243,700. But unless you know how to access the primary markets, you wouldn't even know that CAS existed, and most investors don't. But knowing that assets like CAS actually do exist and buying them early in the primary markets is how people in a year or two or a cycle turn a modest investment into enough money to be set for life. So why don't secondary market exchanges like Crypto.com, Kraken, Coinbase, why don't they just list all the crypto assets? Like, you might be wondering, isn't it in their best interest to list more assets and charge more fees to their users? And the answer is, it is. But they can't list so many crypto assets because of the Securities Act of 1933. Under this act, secondary market exchanges cannot list young and new crypto assets because they resemble a security. And crypto exchanges cannot show unregistered securities, because if they do, they get sued. Just like Coinbase got sued for listing unregistered securities, just like how Kraken got sued for the same thing, and just like how Binance got sued again for the same thing and decided to just leave the US market. So how do secondary markets list crypto assets? Well, as crypto assets grow, they mature. And as they mature, they eventually become sufficiently decentralized. And this is an important term, because when this happens, when the crypto asset becomes sufficiently decentralized, they begin to resemble a commodity rather than a security. And as a result, the restrictions from the Securities Act no longer apply. This is when the secondary market exchanges can finally list this asset. This regulation is why, despite there being over 22,000 crypto assets, Coinbase only shows you about 200 of them. So in other words, they show you less than 1%. This is why step 2 of our service is to access the primary markets so that you can see the other 99%. We help our clients do this through our primary market onboarding service, which is run by Dr. Patrick McCunn, a PhD neuroscientist. Patrick applies his doctorate level understanding of psychology and brain behavior to explain crypto assets and the primary markets in a way that our clients can grasp. Because by accessing the primary markets, our clients are able to invest early. And by investing early, investors outperform the overall market. But with over 22,000 assets in the primary markets, you'll ask, what do you actually invest in? Well, that's what we cover in step 3. Step 3 is what to invest in. See, there are 2 types of people in crypto. There are gamblers and there are investors. Most people are gamblers. They throw money at meme coins and they day trade from their couch while watching some social media video of a random coin. But the real way to make money in the crypto asset class is to be an investor. What do good investors do? They invest in high quality businesses early, because unlike speculative assets, businesses generate real revenue by selling real services to real people. If the service is good, the business grows. And when the business grows, the early investors get paid. What most people do not realize is that there is a new category of revenue generating software businesses being built in the primary markets. As you may recall, crypto at its core is a technological innovation like the internet. And like you saw in that chart from the World Bank before, crypto adoption in the 2020s is where the internet adoption was in the 1990s. So to put that into perspective, in the 1990s, the internet was still relatively a cryptic technology that only a fraction of Americans actually used and could perceive the potential of. The internet in the 90s was new and most people just flat out didn't understand it. This is very similar to what crypto is today, and you don't just need to take my word for it. Mark Andreessen, billionaire founder of one of the most successful 90s and 2000s internet VC firms, says cryptocurrencies today are similar to the early days of the internet. Naval Ravikant is a successful angel investor worth hundreds of millions, says crypto is where the internet was in 1995. And Fred Wilson, American businessman and venture capitalist, says we're in the early days of the crypto revolution, akin to where the internet was in the mid 1990s. And just like how the internet spawned a whole new wave of tech companies like Amazon, Apple, Google, the primary crypto markets are spawning an entire new wave of blockchain-based businesses. Just like how the internet revolutionized and disrupted traditional industries, blockchain technology will do the same. And you don't need to take my word for it again. You can listen to the United Nations. The potential of blockchains to disrupt industrial sectors, commercial processes, or economic systems seems to know no bounds. You can listen to Forbes. AI and blockchain can revolutionize the internet as we know it. Or you can listen to the World Economic Forum. Blockchain is set to change the financial system forever. And this is why billionaire Mark Cuban says it's like the early days of the internet when a lot of people thought we were crazy. Looking at the chart from the World Bank, he is factually correct. Imagine if you caught the internet wave early and you invested in an internet company like Amazon back in 1997. If you had invested $10,000, you'd now have over $216 million. Imagine that in your bank account right now. You and your generations would be set for life. But chances are you probably didn't invest because you didn't understand the potential of that technology back then. These guys did though. Peter Thiel, well, he invested $240,000 into eBay and he turned that into $55 million. Andreessen Horowitz, they invested $250,000 into Facebook and it turned into $78 million. Reid Hoffman, well, he invested $400,000 into LinkedIn and it turned into $2.4 billion. Back in the 90s, you weren't doing what these guys were doing. I'm thinking instead you were busy with your job, your business, your kids or family, and you did not have the time to research and understand the technological innovation that was happening in society at that time. And so you missed out. But that's okay because you have a similar opportunity right now. The primary crypto markets are where the next generation of tech giants like Apple, Google, and Meta are being built. And they're being built by some of the smartest people on this earth. Engineers from tech giants like Apple, Google, and Meta are quitting their jobs to come build these new software businesses in these primary markets because these engineers see that the next generation of tech giants, the next Apple, Google, and Meta will not be built in the traditional economy using the current traditional technology, but instead will be built in the primary markets using decentralized blockchain technology. Let's just take a look at some examples. What you're seeing here is the starting list of legitimate, viable, and revenue generating businesses that are existing in the primary markets right now. And when you look here, what you can see is the amount of fees this business has collected in the last 30 days. And you can think of fees like revenue. So for example, 401 million in the past 30 days, 123.84 million in the past 30 days, 71.8 million. With some of these businesses, you can also see how many fees they've collected in the past 12 months. For example, $946.35 million, $691.74 million, $287.7 million. You can double click on any of these businesses to find more information about them specifically. And what this allows you to do is to research it like you would research a normal business in the traditional economy. You can check out their website, and this allows you to understand what problem this business is solving and their value proposition to the marketplace. As you scroll down, you can see the contact information, you can see the social media for these enterprises, and here you can actually speak with the founders of the software businesses directly. So you see, this market is very open and transparent. So transparent that you can even check the code for this business itself. This is all open source software. So for example, when we click here, well, we can see everything. Now we know that the numbers that they're reporting from their businesses, it's not false. This is open source directly from the blockchain. This cannot be falsified. There is no information that can be hidden from us, the investor. There is no corruption. And if you don't know how to read the code that constitutes this business, that's okay as well, because these businesses hire auditors to make sure they are operating correctly. And we can see these audits for ourselves. We can check these reports for ourselves. We can dig into as much information as we want. It goes on for pages and pages. And all of this informs us in our research of whether we want to invest in this business or not. So if you were to do this, this information gives you better context that these are not just random tokens or meme coins that go up and down for no reason. For these businesses, there is a revenue source behind them. There is a value proposition, and there is a team that is building and driving this growth. But this is the side of crypto that most people do not see. Instead, they think it's a casino and they just gamble. They would rather use it for dopamine than treating it as what it factually is: a new economy containing the fastest growing investments in history. An investment market that from 2020 to now has grown from a market cap of 600 million to almost $75 billion. That's a growth of 12,349%. So the market itself, the primary markets have done a growth of 123x in just 5 years, and it's still growing, meaning 5 years ago, if you'd invested just $50,000 into some high quality investments in the primary markets, by now you'd have $6.1 million. But you didn't do that, and it's not your fault. Gurus on YouTube don't talk about this side of crypto. And so most people just don't realize that it exists, but it does. And crypto angel and VC investors are getting very rich from it. For example, Paul Veredict, who turned 500,000 into 15 million, or Fred Ursum, who turned 1 million into 31 million, David Peterson, who turned 700,000 into 41.3 million through the primary markets. By now, you might be seeing how all this ties together. Step 1 is to position yourself for the upcoming cycle. Step 2 is to do that by accessing the primary crypto markets. And step 3 is to invest in high quality, early stage businesses that are building in the primary markets. Now, what you need to understand is that finding these businesses is hard. You saw all that information that is available and that you need to go through to understand how the business operates. Most of our clients are busy with their salary jobs or their businesses or their real estate clients, and they do not have the time to do this themselves. I barely had time to do this myself as an attorney who was working in the space. And so now with my business, this is why I have hired a team of full-time researchers. This team is led by Callum and Sean. Callum is a former crypto and tech executive who worked for over 4 years in the primary market building infrastructure projects by the Ethereum Foundation. And Sean has over a dozen years of experience with actually hundreds of different software projects. The sole job of this team that they lead is to filter the 22,000 crypto assets that are in the market and find the legitimate, high quality businesses that have a real value proposition and a solid team that can drive growth. They'll be your eyes and ears in the crypto market, and they present us with the best this market has to offer so that you and I can profit from this technological innovation and bank returns this cycle like the top angel investors and VC firms do, without having to make this our full-time job. Now, importantly, on top of getting access to our research team, you're going to be paired with a dedicated primary market consultant. They're going to act as your direct point of contact for one-on-one expert help. Any questions you have, you can just give them a call or a text, and these guys I've hired are from the industry, and I can recognize who is and is not a professional, and these guys are professionals. They've worked with the Ethereum Foundation, they've worked with Solana Labs. They are specialists immersed in the cutting edge of this new investment market, and they'll be by your side as a partner who lives and breathes this space every day so that you don't have to. They have the expertise to give you clarity and confidence in this volatile market that reacts quickly. They help you avoid bad decisions that could self-sabotage your gains because, as you know, in this volatile market, the emotions that we feel can mess with us. And with the opportunity so big, this cycle, this type of self-sabotage can cost us hundreds of thousands or, depending on your portfolio, millions of dollars. This is why Patrick, the PhD neuroscientist who built our onboarding, has helped design systems for emotional management that you are going to go through. All of our consultants are also trained on this system so that anytime you want to buy or sell an asset, you can talk to them first and both operate through this system. You can rely on our consultants and our systems to be a rational analyst to help counter your own emotional biases. Okay, so I know we've covered a lot here, so let's do a quick recap. Historical data shows us that we're only months away from the next explosive bull run. Institutional adoption has set the stage for this to be the biggest bull run yet, and so you must position yourself now. Secondary crypto markets like Coinbase, Crypto.com, Kraken, they show you crypto assets too late, so you must access the primary markets and buy these assets early. In order to maximize your profits, you need to think like an investor and put your capital into businesses that have the potential to disrupt industries. So, are we a good fit? Now you can see that my vision is to become a global leader in crypto services, a bit of an industry disruptor as well. You could think of us as one day, hopefully, being the Morgan Stanley of crypto, if you will. So my brand and my reputation is very important to me. That's why we do not just work with anyone. Not anyone can be our client. We are very aggressive and particular with the types of clients that we take on, because we need to ensure client success. This is how we are going to build a brand that is recognized, and this is how we establish trust in the marketplace. And this is one day how we will scale into a global leader. So if it's not a good fit between us, we're going to be the first ones to tell you that. But if you do want to invest in crypto seriously, you're limited on time, resources, and expertise to do this yourself the right way before the cycle kicks in, and you're looking to capitalize on this brief window of opportunity to significantly multiply your wealth this cycle, then I built this company and service with you in mind. Here's what to expect for your upcoming call. We're going to audit your crypto portfolio. We're going to tell you exactly how we are preparing for the upcoming cycle, and we're going to tell you what assets we're buying, when we're buying them, and when we're getting out. Thank you for watching this video. I'll see you soon.